Hi, this is Matthew Cratter from Trader University. And today I want to talk about whether we're at the end of the bull market. I've been getting a lot of questions from readers and really a lot of bearish sentiment from my emails. So I want to just go over this. But in order to really discuss it, we need to look at where we've been on the S&P. So this is a chart of the S&P 500 index, the biggest 500 stocks that trade on U.S. markets. This is a monthly chart. And you can see we really have two kinds of movements in a stock market at any time frame, really. And the first is a trending environment. So for example, from the bottom in 2009 to the beginning of 2010 through the first quarter, we really had an uptrend. And so you can either be trending up, you can be trending down. You can see leading down to that in the bear market of 2008 through 2009, we had a downtrend. But then markets often also have the tendency to enter sideways or consolidation periods where they bounce around in a range. And we can see something similar happened after the run-up from 2012 to really to the middle of 2014. We had a nice uptrend, and then the market entered another sideways period, a period of consolidation, where it was trading between a range basically between 2,200 and 1,800. And then, of course, 2017 was really straight up. 2018 was really a volatile year. And one of the things you can see is that we've been trading in a sideways range since the end of 2017, really trading in a range between 2,400 and 3,000 on the S&P. And it's been a very volatile. You can see that the size of the monthly bars have been much longer than they were previously. So we've entered a period of sideways market action and volatility. But what's really interesting is that there's a lot of bearish sentiment. I've done some fairly bearish videos over the last couple of months, but I really am a trader, and so I'm interested in getting to the truth. And one morning I'll be bullish, the next week I'll be bearish. And what I'm seeing here is just a lot of negative bearish sentiment from my listeners and from my readers. And this is all happening at a point when we're trading really at the top of the range, quite surprisingly. We've been in this sideways range, but in spite of the fact that it's summertime, in spite of the fact that things are very volatile and there's a lot of negativity, we've got the big G20 meeting this weekend, we're still trading at the top here. Now, this is a very strange thing is happening because if we take a look at the federal funds rate, this is the market rate that's controlled by the Federal Reserve in the U.S., and that's currently the Fed funds target. And this is basically what all other interest rates are key to. But the Fed funds target rate is 2.50 to 2.5%. Target rate range 2.25 to 2.5%. And we can see if we look forward, we can really see what the market is predicting for future Fed meetings. So if we look at Fed funds futures, if we go to the CME and you just type in countdown to FOMC, we can see that for the July 31st, 2019 Fed meeting, there is almost a 72% chance that the Fed will cut rates and set a new range of 2 to 2.25%. So this is pricing in a very high probability of a 25 to 50 basis cut, and then even more of a cut, possibly 28%. So this is very strange because we've never before had the Fed cutting rates when we're trading at all-time new highs or close to all-time new highs. And so this is what is making me lean a little bit more bullish, thinking we're in the third year of the president's cycle. The Fed's cutting rates, almost certain to cut rates this summer and possibly a second time later this year. And yet there's all this bearish sentiment that I'm hearing from everyone. Then if we just look at market action, lots of well-known stocks that I've talked about here before. Some of my favorite stocks like McDonald's hitting new highs, MCD, Chipotle, CMG, looking like it's getting ready to break out. Disney is another favorite as they come out with their streaming service. Starbucks. All these are holding up extremely well. Meanwhile, there are a lot of people who are trying to make money in Tesla. I would stay away from this one. I think this one is showing such negative relative strength in a strong market that there's no reason to be in a stock like this. I personally think the stock is going to zero in the next 6 to 12 months. But another place to be, you don't need to be in Tesla. You can be in some of these enterprise software stocks in general, IT stocks in general. Anaplan is a good one that looks like it's setting up. This is PLAN. Zendesk, ZEN, trading near its highs. Smartsheet, which is a recent IPO from last year, is holding in very, very well. And finally, so Smartsheet is SMAR. And finally, Veev, VEEV, Viva Systems, has had a bit of a pullback, but still holding very strong in this tape. So I'm leaning toward the bullish side. One can certainly trade these stocks from the long side without worrying about a bear market. And you can use as I do, you can use the 50-day moving average as your stop. And if we get a daily close below this, that would be a sign that, to exit and use a stop loss. But this market is looking quite bullish to me. I think we may have a run going into late in the summer into the fall. And so I'd encourage you to test your presuppositions and really let market action and market reaction to news drive your trading. Let me know what else you'd be interested in learning about the stock market, and please be sure to hit that subscribe button if you want to get more videos like this. Thanks a lot for listening. I'll see you in the next video.